coffee.com site. As you can see from the data, it's not a recent one. Available on my buymeacoffee.com site. As you can see from the data, it's not a recent one. When was the data? 2019, 2020. But I remembered I put it up a few years ago and I had a lot of requests for it, so I've finally decided to release it. I was going to convert it to the new Excel array formulas. I never got around to it. So I'm going to put it out there for people to do it themselves if they'd like. The array formulas would just make it more robust. The relative reference formulas I have now are a bit, these sort of offset formulas, they're a bit volatile. They're not so great. The new ones are better. You're going to have to be up on the latest techniques. Anyway, we'll get to the chart. That one is the actual chart. It's 100 days look back. The data only accepts 250 odd days, basically a year's trading days, 252 or 256. And to get a good sized chart, because I've mucked around with it, you don't want any more than 100 days. You put 100 in there and you get a look back from the data of 100 days. As you can see, the data goes down to 253 minus 5, so it's about 249 days. Bit under, but yeah, I just downloaded in Market XLS Express. This is Walmart data. I'll just show you what I've got an affiliate link for Market XLS on my site. I'll show you how it works to download data. It's quite simple. If I want to download, say, 1 year close, you can also do custom dates and get custom features. I'll just quickly show you what it does. Last X trading days, we'll put 252, and we'll put the unredoubtable SPY. Oops, I've got to put SPY up there first. You want to click out of it, then back in, and we want to go to Market XLS, 1 year closing date, last X, 252. See what we get. And there you go, you get the SPY close from the 4th today, 4th of the 1st, 24. You can select to do it in the proper order because it's reverse order. Share market pricing, oh well. Share market pricing, you're going to want to, I'll go back up. You're going to want to reverse that. So we'll just go there and we'll go to data, sort A to Z, from 23 to 24 it's sorted, and then you can do your returns and everything there from that. That's an example of Market XLS. If you want an affiliate link, go to my Buy Me a Coffee site, get a slight discount. The trend chart is here. I've reduced it here with this to blow it up to explain it more. What we have here is 100-day look back of Walmart in 2019. The tracking index, Trig's tracking index, is this here, which is on the right axis between 0.5 and 0.5. The data, the broad ghost data there within there indicates between 0.5 and 0.5 randomness. There is no trend. Once it breaks out of the 0.5 area, it's going into persistence. Once it continues for a good number of days, you can say it's a trend. You could say that, let's see, when it hit 0.5, by the time I got around to about there, it was a trend, downward trend, and then it quickly shot up, and by the time it got to there, it started to trend roughly again. Dropped down again, then, and now it's into randomness, or was into randomness. So that's what it shows, and that is the forecast, which is an exponential smoothing forecast, a special one. Adapted response exponential smoothing forecast, adaptive rate, and that is the actual price, share price. And that blue line, I believe, is the linear trend line, which is fitted, and the linear trend, if I just blow that up a bit, was not significant, 0.68. Well, it's indicating there was a bit of a linear trend. There is a bit of a linear trend upwards. It's 0.68, but it's very marginal. It is positive, there's no negative, so it is a positive return for Walmart. But as you can see, these other charts, that measures volume versus return. So you can see volume spiked when the price rose, and it spiked as it dropped. It spiked as it jumped up again. It spiked at the cusp as it jumped up, and then it dropped down again. It's hard to actually pick whether it's on the rise or the drop when it spikes. There's a lot of activity when it really spikes anyway. When it really drops here, there's also a lot of activity. When it dramatically drops, there's a lot of activity. When it dramatically rises, there's a lot of activity. When it's just hovering around the zero point, the return's on the right axis, the return of zero, there's generally not much activity. The further it moves away, positive or negative from zero, you'll see the volume go up greatly. Now the volume is scaled. It's not normalised. It's not a 0-1 scale. Well, actually, it's a 0 to 1.2 scale there. It slightly went over. The formula is in there for those who want to look at the spreadsheet further. And this is a measure of a cumulative return. Now, this is what people don't do when they trade. They think they buy and sell, and because of various fallacies, or what do you call them, rational errors, or what do they call them, well, errors in thought, psychological errors, like the attachment and the availability error. People only remember their last win, not when they first started trading. You can see when they first bought it, it went up. It's 0.5 positive territory. Then it dropped down to almost zero. And then at the end of the year, it ended on a really big gain of 0.15, which is pretty good for any share. But 2019, if I do remember, was a bit of a boom year. 2020 we had the crash and COVID, and in 2024 we're back into a bit of a bullish market again. These things come and go, and that's the overall pattern trend, and the trend is the same as the other one. So that measures a cumulative return, that measures volume versus return, to see the volume increases with the spike in return or drop in return, and that measures whether there is a persistence or tendency and how long it continues before it becomes a trend, and when markets turn. Now, you can't use it to predict when markets turn, but you can see when they have turned. So it's not like a technical indicator. There's no technical indicator anywhere that has any relationship to reality compared to this. This is these are all actual statistical measures that I derived from my learning of inventory theory in management science many years ago. I've used it throughout my life. I thought, why don't I apply this to the stock market? And I have, and I'm putting it out there for all you people. And I hope you find it helpful, and all the best. Thanks.